So, Peter, the year of Abenomics has turned into the year of the Abe stock rally. And as we head into 2014, things look pretty good. Corporate earnings are up. Confidence is still high in Japan.
Yeah, it is. No, corporate confidence, which is a key thing, is rising. And clearly, investor confidence is rising, which we've seen in the stock market. I mean, one of the interesting things about the rally that we've seen so far is that it's been driven mostly by foreign investors who've been piling into Japan. Foreigners own about 30% of Japanese stocks at the moment. So the big question for 2014 is, will that transfer over to domestic investors, and will they get behind this rally?
With Abenomics flying so high in terms of that determination to make Japan sing, won't the government push for that to happen, more domestic buying of stocks?
The government is pushing for that to happen. I mean, there's a couple of very specific things going on which we think sort of translate or add up to what we call an Abe put in the Japanese stock market. So to begin with, the first thing that's happening is that the government has set up a tax-free investment scheme that allows people to put up $1 million yen, about 10,000 US dollars a year, into a tax-free kind of account. We think that the projections seem to be that about 10 million Japanese will sign up for these accounts, and if they use the full allocation and about a quarter of that goes into stocks, that's potentially 3% of the Japanese stock market of new money coming into stocks over the next 5 years. So that will push it up.
So we've had a near 50% rally in the Nikkei. Do you think it's possible to do another 50%? Will the government really make sure we see something like that? Well,
there's also, I mean, there's the individual accounts, and there's also the big government pension fund. There's a big review going on there, pushed by the government for it to allocate away from its main holdings, which is Japanese government bonds at the moment, which aren't going to be a good investment if inflation gets going, into other things, including stocks. And then the third factor, which is kind of a potential sort of wild card here, is that the Bank of Japan is probably going to have to do some more kind of quantitative easing at some point in 2014 to hit that 2% inflation target that it's trying to hit. And the Bank of Japan is already buying so many government bonds, it's very hard for them to buy more. So one potential option is that the Bank of Japan goes out and starts buying exchange-traded funds or even actual stocks. So when you add it all up, it looks like basically there are a number of factors within Japan that will be pushing investors to keep buying stocks. So whether it's a 50% rally or not, who knows? But it looks like there's definitely a fairly big support, a fairly big Abe put under those.
So when you add it all up, from domestic investors to a weakening yen to foreign investors flooding in, it could be another big year for Abe in the stock market.
It certainly could.